Good morning. Welcome to the video conference of M. Dias Branco with reference to the fourth quarter results of 23. We have with us Gustavo Lopes Theodosio, Vice President of Investments and Controllership, and Fabio Cefali, New Business and Investor Relations Officer. We'd like to inform you that this event is being recorded and that all of the participants will be in a listen-only mode during the company's presentation. After M. Dias Branco's remarks, there will be questions and answer questions for investors and analysts. The translation is available clicking on the interpretation button. For those listening to the video conference in English, the original audio in Portuguese can be muted by clicking on Mute Original Audio at the bottom of the platform. The webcast is also being broadcast simultaneously on YouTube at the address YouTube/RIMDS. We'd also like to let you know that any declarations that may be made during this teleconference with relation to the perspectives of business for M. Dias Branco, projections and other operational are based on projections and estimates that can only, and based on the information currently available. They involve risks and uncertainties and premises as they refer to future events and therefore in the circumstances which may or may not occur. Investors should understand that economic conditions of the industry, as well as other operational factors, may affect the future performance of M. Dias Branco and bring to results that are substantially different than those which are being mentioned today. I'd like to now pass it over to Gustavo, who will begin the presentation. Gustavo, please go ahead. Good morning. Thank you. Good morning, everyone. Welcome to our results call. I would like to start by thanking our employees and for their hard work during 2023, always with great deal of dedication and work, and especially discipline in the execution. Thanks to this team, and of course the support of our stockholders, the company has been transforming itself with the delivery of consistent results in accordance with our plan. We are more and more certain that besides the hard journey, we're heading in the right direction, seeking excellence, looking for excellence in the commercial presentation and distribution, in the improvement in the level of services and our portfolio, adding more value and new SKUs, and also new premium categories, controlling our the company's expenses, and the cash management and the working capital, strengthening our brands, efficiency in our production lines, and maintaining the quality of our products, recognized by our consumers. Starting off with the first slide, where we see the results, I wanted to point out, first of all, record numbers in the history of M. Dias, both in net revenue as well as EBITDA and cash generation. I'm going to pass through each one of them. Net revenue for 23, as well as with 10.8 billion reais, with growth of 7% in relation to 2022. When we look at the quarter, the last quarter of the year, we closed with net revenue of 2.8 billion reais and EBITDA of 1.4 billion, a record from the history of the company. The company had never been more than 1 billion previously. This represents growth of 59% in relation to 22, with a delivery of EBITDA of 442 million, representing a growth of 265% in relation to the fourth quarter of 2022. The record net profit in the history of the company of 889 million reais, with a growth of 85% in relation to the same period of 2022. The EBITDA growing more than the EBITDA we have in terms of percentage terms, greatly due to the generation of cash, the company's cash generation, the operation of our operational results, and also a great deal of discipline in the working capital, something that we have been working on since 89, since 2009, which has been very relevant. And the record generation in 2022 reached 126 million, generating cash of 584 million reais. So the results that we're very proud of, and we're going to describe this in more detail as we go along, in a little more detail. Fabio Cefaly, our Director of Relations with Investors. I'm going to pass it over to Fabio now. Have a good day. Thank you all. Thank you. Good morning, everyone. Before we go into the details of the numbers, I wanted to exemplify and illustrate some of the initiatives that Gustavo mentioned in his introduction about this process of transformation of M. Dias Branco, which we've been going through. So now starting with the upper left-hand corner, this is the first point in relation to our marketing plans. Marketing has always been focused on selling more and better. Selling more means have more volume, and better means have better margins and a higher average price. So we've been concentrating our efforts in marketing, and some of our 20 brands which M. Dias Branco has, this highlighting Piraquê, which is our principal cookie brand with a premium price. The Piraquê brand was very well recognized during 2023. It won 2 Gold Lions in Cannes. It grew from 21 to 22 and from 22 to 23. And today it's the principal brand of premium crackers and biscuits in Brazil. In this price point, the brand Adria was considered top brand in pasta. And we also had the recognition of other brands of M. Dias such as Vitarella. So it's important to remember that several years ago, we invested less than 1% of our net revenue in marketing. Today, we've been investing 2%, approximately 2% of our in marketing to sell more and sell better. Catching a ride on marketing, the highest value-added items, which are combined with our strategy of launches, which has grown at very high rates. What we call other categories, which is beyond those which are cookies and crackers and pastas and margarines. This group of categories, such as snacks, granolas, healthy foods, has grown by 31% from 21 to 22 to 23, a sign that M. Dias Branco is able to add items to its portfolio with higher value added and have faster growth in markets that grow quickly, that grow by double digits year on year. Our core categories, such as cookies and crackers, have also had an important contribution to the results of 2023. We had a record number in our revenue derived from our launches of new cookies and crackers, 299 million reais in reference to the launches of 22 and 23. All of this growth is based on the volume of revenue, would not have been possible without an improvement in our level of service. And here we're talking about delivering to the clients who are the retailers in the time and quantity requested, refreshing the OTIF and the case rating, Great Place to Work, which we measure our level of services. Case of rating was 84%, and we finished 23 with 92%. And the OTIF, which is the very important indicator, which goes down into the details, we had a 40% rate, and we closed 23 with 76%. We had a series of initiatives in the industry to combine industry efficiency and technology. We call it Industry 4.0, which has brought efficiency, relevant gains in productivity for our results. The model of Perfect Store, which reflects everything that Gustavo mentioned about the execution, commercial execution, perfect in the point of sale. We have very clear metrics tied to remuneration of the commercial team who are present in stores, represents 70% of our sales of cookies and crackers and pastas and other categories as well. We already have heard, I've always heard our stockholders and our minority stockholders, and we increased the payout from 60 to 80%, and our dividend for the quarter from 5 to 6%, to 6 cents per share. We're known as a great place to work for the first time in 2023. We implanted in the beginning of 2024 SAP, which is very important to give us more strengthening of our systems architecture. We combined our two factories for healthy snacks, which is Jasmine and Latinx, in the Jasmine factory in Curitiba. We implanted the model of a commercial model, which is much more collaborative between MGS and its clients, which is JBP, Joint Business Plan, which is a model which gives more visibility. We have the visibility of at least 1 year with these questions due to the commercial questions and volumes. And these combined are revisited every 2 months, which is an overview of some of the initiatives that have been executed by M. Dias Branco in the last 3 years, but which have been relevant for the improvement of our results from the standpoint of volume and margins. Remembering that in the 3-year period of 2020 to 23, our margins were highly hit by the high increase in the cost of wheat due to the devaluation of the real. And so a lot of this growth has not seen in our results. But now with the standpoint of commodities and exchange being more stable, we're starting to see these structural improvements appearing in our financial results. So remembering what's our strategy? Our strategy has 3 pillars for growth. 1, sell more and better in our current business, which are cookie and cracker business, with growth in this area of center west, south, and southeast, which defending our area in the defense area, which is the north and northeast. Entering into new categories, which has materialized over recent years, such as snacks, as with Jasmine, and with the Latinx brands, and internationally through our exports, through the acquisition of Las Acacias in Uruguay. All of this supported by a continuous program of productivity and efficiency. Going into the details of our results, I want to look at the area of revenue and market share. The first relevant information here is in relation to the 2 principal markets that MGS operates in, which is the cookie and crackers and pastas. Both showed growth in comparison with the fourth quarter of 2023 from 2022, and also in the comparison of the year of 2022 with the year of 2023. In value, the cookie and cracker market grew by 3%, and the pasta market grew 11%, cookies and crackers, and the pasta market grew 5% in the quarter, and over the year grew by 13%. The area of crackers had a slight reduction year on year, but this is because of the change in our size of our packaging, which happened in 2022 in almost all of the large players in the market. On the other hand, the pasta brand showed growth both in the quarterly as well as in the annual vision. In units sold, the 2 markets grew, and in average price, the 2 markets showed increases in average price. The question of stocks for M. Dias Branco, which was something that was widely discussed in the 3rd quarter, since we saw in the 3rd quarter of 2023 a reduction in the coverage and stock of the MGS items in our clients, we had the expectation of a normalization of this over the 4th quarter, and the reality was exactly as we expected. So from the third quarter to the fourth quarter, we observed in cookies and crackers a normalization of the coverage of stocks from 34 to 40 days in the fourth quarter. And the same thing was seen in the pastas area from 39 days to 47 days. From 40 to 47 is the normal level of stock coverage in our clients. Net revenue, both in the quarterly as well as the annual vision, net revenue showed growth of 0.2% from the fourth quarter to the fourth quarter of 23, 7% in the annual vision. We had growth in the volume sold both quarterly as well as annually, 9% in the quarter and 4% on the year. And we had a price drop in the fourth quarter to the fourth quarter of 23. Part of that fall off referred to the accelerated growth of wheat, especially in the TAC areas, to raise the Bento Gonçalves flour mill, and roughly 3% year on year. This growth in revenue, both in value as well as in volume, has a direct correlation with all of the initiatives that I mentioned previously, which are structural initiatives, and which will be executed have been executed over 2023. So marketing, which is to sell more and better. Today we invest approximately 2% of our net revenue in marketing. The accelerated growth of higher value-added items grew by 31% on the year and is already 443 million in net revenue, a relevant value, observing the total of sales of M. Dias, the reintroduction of low-cost brands for the cash and carry market, which is a movement which we initiated between 2019 and 2020. We had a pause to revisit these items structurally, these brands. And at the end of 23, we came back with a value proposition which was closer to the growth which we expected for M. Dias Branco, as these are items of low cost and low price without cannibalizing our existing brands. The size of the packaging, which is a relative factor for the growth of volume, this happened in both pastas between the second and third quarter of 22, and for cookies and crackers over 2022, which gave us better competitiveness for our items. The accelerated growth of flour and meal, the volumes in Brazil grew by 10%, and in the TAC area, which is the south, southeast, and center-west, we observed the growth in volumes of wheat, flour, and meal of 21%. All of this supported by a process of pricing, a dynamic pricing, in line with all of the improvements which have been done, the process of management of the revenue of M. Dias Branco, the capture of prices in cookies and pastas, and the reduction of these volumes in the fourth quarter, and the record contribution in the launches of cookies, which came to 299 million in 23. Looking at the portfolio, we removed from the portfolio items of low profitability, such as lamb de picanha, cookies de baunilha, and vitamin milk cookies. Revisiting our portfolio, looking simply at the potential for growth with a good margin, the use of working capital to bring more volume, and also several promotional activities to leverage these volumes, especially in the north and northeast regions of Brazil. And to conclude this chapter of revenue, the improvement of the two principal indicator of services, the OCHIF and the O rate. To look at simplify the launches in the 299 million reais in cookies, the price of cookies for M. Dias, the net revenue per kilo added at 6.1 per kilo in 2023, with certain examples of growth where M. Dias we saw Looking at the average price and the margins. The malted black malt of Piraqué, the chocolate, with an average price of 28.7 per kilo. All of this work has been on the malted Piraqué, which when we acquired had few SKUs, and today has a much more complete line of 16 per kilo, and also 16.3 per kilo, and the Adria brand cookies of 16.5. Which was widely discussed in the third quarter of 2023, starting here with biscuits. With the volume in biscuits and cookies. The volume in cookies and biscuits also showed, and also pastas, we saw an operation both in volume, share volume, as well as price. We saw a small retraction of share, both in value and in volume. But the two categories of M. Dias Branco, which represent more than 60% of our revenue, we had a recovery in share from the third to fourth quarter, both in value as well as in volume. Looking at the revenue per region, the commercial of M. Dias in defense and attack, we saw growth in the annual vision, both in the area of defense, where we have more than 50% of our participation in the market in biscuits and pastas, and a growth in revenue a little higher in the attack area. This with an increase in average price in both areas, and also growth in volume in both areas. Looking at the quarterly vision, we've had an increase in revenue of 1% in the defense area and a slight reduction of 1% in the attack area. Here it's important to mention that this fall off in 8% in the attack area has to do with the mix, since our business in flour had a growth of 20% in volume in the attack area, which brought more revenue and more EBITDA to that region. The area of revenue, we're going into the costs and expenses. The first message here, we saw during 2023 a fall off in prices in both principal commodities, wheat and palm oil. The graphs show wheat and palm oil in dollars per ton. The red line is the spot price, and the blue price, both for oil as well as palm oil, is the average price in the M. Dias stock. So on the two ends of December 22 to December 23, wheat fell by 28% and palm oil by 32%, our cost, which was very important for the recovery of our margins. What we've seen also in this slide here, the variable cost went from 4.1% reais in 22 to 3 in 23, but the fixed cost was basically stable. The average price was quite stable, with a slight retraction from the second to the third quarter. And then the inflation between variable costs and fixed costs, the recovery of the volumes over 2023, and the management of prices brought us to a gradual recovery of our gross margins to close the year in the fourth quarter of 2023 with 36.3% of gross margin. And for the year it was 28.5%, and for 23, 33%. The administrative expenses and administrative expenses during 2023 in a rate of between 20 and 20%, 25%, 21% of net revenue, and we closed the year at 20.5% of net revenue. 3 or 4 years ago, M. Dias Branco had a level of SG&A close to 25%. So in this 3-year period of increasing costs, volatility, devaluation of the real, the company was very well prepared. We didn't sit there and watch. We made a lot of internal improvements, which are now appearing in the results. And we've been able to maintain our SG&A in the level of 20 to 21%. The EBITDA was record, as we mentioned in the beginning, with we had a 16% margin, remembering that in the third quarter we had 16.1%. In the fourth quarter, usually is seasonally disfavorable, but due to all the improvements that have been done during the last periods in the recovery of our volumes, we were able to deliver a margin, an EBITDA margin in the fourth quarter close to that of the third quarter. We closed the year with 1.4 billion in EBITDA and a margin of 13.2% for the year. The profitability followed the EBITDA performance. We had a margin above in the fourth quarter above the third quarter of 12.3% for the fourth quarter and 9.5% in the third quarter. 342 million reais of profit, a record, and also closed the year with 889 million reais of net profit, a record from M. Dias Branco. Going to the cash generation, debt, and investments. We generated 2.12 billion reais cash for the year, a historical record for M. Dias, is due to two things: EBITDA of 1.4 billion and the liberation of working capital of 825 million reais. In the quarter, we also had the release of working capital close to 100 million. Here's a detail of the three principal lines of working capital: suppliers, clients, and inventories. For clients, we had an increase of 5 days from 55 in the third quarter to 60 days in the fourth quarter, which is what, as you mentioned in the beginning, we had several initiatives, one-offs, to offering better periods to certain clients with a counterpart with the volume. And so, but it's more than compensated by the management with suppliers, which went from 50 last year's to 59 days this year. Remembering that 4 years ago, we had approximately 20 days terms from our suppliers, and one of the other areas where we developed a great deal over recent years. Our inventories went from 85 days to 64 days in 2023. Due to the growth of our EBITDA, the growth of our revenue, the growth of our EBITDA, and the liberation of working capital, we closed the year with a net cash position of a negative 74 million, allocation of 0.1 times, which gave us a AAA rating from Fitch, which is the highest Fitch rating. And debt that we have, 76% is long-term debt. We invested this year 367 million reais in capex, part in maintenance, and another part related to the implementation of the SAP system, which happened which already began in the beginning of 2024. M. Dias went up 9.6%. The value of our stock went up by 9.6%. And for the 6th year, we were recognized and we won the transparency program of the ANEFAC for excellency, which is important for all analysts and all investors who accompany the company, that it's a guarantee that our financial reporting are excellent, clear, transparent, and quality. Looking at the ESG chapter, there was a series of improvements over the years. In 2023, we ended the year with an MSCI and ESG rating of AA. In 2019, we had BBB, and for the second year in a row, we have a AA rating. In the ESG, we're in the portfolio ESG for the 4th year in a row. The first year was 2020. The CDP, which is an important indicator and related in relation to greenhouse gases, we closed the year with an A score. In 2020, we had a D. We are also looking at the ICO2 of the B3 and other important indexes of diversity, women in leadership, a ID Versa of the B3, and also we entered into the Great Place to Work of the B3, known as a Great Place to Work company for 2023. These are a few of our sustainability indicators, which we accompany quarterly, related to the 3 pillars of sustainability of M. Dias: caring for the planet, believing in people, and strengthening our partnerships, our alliances. All are explained in detail in our report. So before passing it over to the question and answer session, I'm going to talk to Gustavo to close this part of our presentation. Gustavo? Thank you, Fabio. We conclude here, it's important to remember that the levers that you have been accompanying over recent years continue with in 2024. Talking a little bit about these levers, we have the scaling up the brands, recently acquired brands, which we call cross-selling, both Jasmine as well as Piraqué and Martinex, together with the brands that we previously had a very strong presence in the Northeast and are expanding into the South, Southeast, and Center West, such as Vitarella and Fina in the case of domestic flour. We also continue with an arm of innovation, which has been a very, very important work that we've been doing within MDS for the last 3 years, with several launches during the years, prioritizing higher value added and better margins for the company. Also, we continue with the exclusive brands for the cash and carry market, a model that's slightly different, a little different than the 2019 model. Beyond low price, we are making exclusive products, low cost items. For instance, both by the packaging, we changed the packaging, we've changed some formulas compared to our local competitors, the more popular priced local brands, and consequently getting to the shelves for the consumers in a more accessible price point, a more competitive price point. Remembering that this strategy of exclusive brands, again, different from in 2019, is this implementation was not done for all of Brazil. It was only done in certain regions, very surgically, where we needed to fight against some local competition who was using more popular priced brands. So it's a strategy that's very well defined, and which places us in the search for growth of market share, as we've been commenting during these last quarters. Beyond these, we have the habilitators, the enablers, such as the marketing in the last 4 years, 3-4 years. We went from almost 2% with effective results in relation to the brands Piraqué, Vitarella, which are clearly recognized from the view of the consumers and through the research we've been showing during these quarters, prioritizing the excellence, commercial excellence, the number of the assortment, pricing, correct pricing, merchandising that's well adjusted, all of this closer to the retailers and to the confection of the joint business plans. We also, through revenue management and pricing in areas which are new, relatively new, experimented, tried by M. Dias, and also at the high level of service, which is an important enabler for our growth, both in a better mix, a more qualified mix, as well as regional expansion. So we're doing all of this through an office, a transformation office, giving more speed and agility to this process. This transformation office has the presidents of 4 vice presidents, as well as a consultancy which we recently hired to help us in the correct prioritization in the of these actions and the control towers, and guaranteeing the effective capture of these values. We're also calling this all hands on deck for 2024, based on a regional expansion to the attack area and the execution of a portfolio adding more value and also offering more impact in the margins of the company. Summarizing, the journey is only beginning. We still see many opportunities. We're in the beginning of the trajectory. There's a lot of upside to come. And with these improvements that you've been accompanying continuously in the hands of the company. So, and I'm going to pass this over to the Q&A. Fabio's here with me. And once again, you're all welcome to our call and this session of questions and answers. We'll now start the question and answer session for investors and analysts. If you would like to make a question, please hit the raise hand button. If your question has been answered, please leave the line clicking on the same button. Our first question comes from Gustavo Troiano from Itaú. Good morning, Gustavo, Fabio. Thank you for the opportunity. There are 2 points that I would like to exploit with you. The first is in relation to the share which you reported in the quarter, and trying to relate this with the price reduction that we've seen. Also looking more at the Biscoit, the cookie and cracker area, what's the price list and the mix in this sequential thing that you mentioned. If you could give us also repeat a little bit about the launches of the exclusive brands for cash and carry, if this is already in the P&L, and if you could explain this price reduction with this new mix, or if it's something that will come more into the first quarter of 24. To understand this dynamic of mix and table in the cookie and cracker area. Or MGS which was a little bit above the industry. If you can explain a little bit if this variation, if this is tied to the egg, or we see a convergence of these prices with the cost of MGS falling as we go into the first quarter to see these prices of MG converging with the spot market. Hi, Gustavo. Thank you for your question. This is Gustavo speaking. As we have been commenting, we have done this movement of looking for market share in a way that is very granular and without doing anything crazy. There has been no reduction in price lists in the fourth quarter. We should see, in fact, a retraction of prices in the first quarter of 24. This lower average price is a result of mix, and I'll explain what that represents, and a few actions, promotional activities, which are surgical in certain regions without compromising our margins, the gross margins of the company, margins which, as you have seen, which was improved, and then it was better in this quarter than it was in the third quarter. So let's look at the mix question. First, we need to point out that the evolution of the exclusive brands, they've already had an effect on the P&L in the fourth quarter. We already have 4 principal brands in the principal cash and carries, and 1 specific cash and carry regional, an important regional cash and carry. The objective, once again, to fight against the low price local brands. And here, when I talk about exclusive brands, private labels, they're very much related to the categories of the higher volume items, these SKUs, which generate market share or loss of market share. So to be more specific, we're about crackers, Maria crackers, Maizena crackers, and in the case of pastas, the common pastas, the day-to-day pastas. So there's an impact on these sales of higher volume items of exclusive brands, and also the impact of within these categories, the categories which have most grown are those with lower prices. So this has an important effect on the mix. It was exactly these categories which made it possible for M. Dias to lose market share. An important point is that these sales of these categories were higher, but they did not represent a reduction in the other categories. We continued to grow in the higher value-added categories, both in the Piraqué brand as well as in certain specific categories, such as the wafers. However, the volumes of these categories in the exclusive brands was not enough to compensate the growth of the premium brands. This is the first point. The second point is there was, in fact, a higher level of sales in the flour area, even though it has a margin which has a healthy margin, it still generates an important effect on the mix and the P&L of the company compared to other categories. Talking about prices specifically, there were several actions in this point of sale in the fourth quarter, which were higher than in the third quarter. However, looking forward at the price level, the price list, we have not added any price list reducing prices. On the contrary, we've already had a first list in 2024 with the increase due to several ICMS levels going up in several states. And so we see this effect affecting prices in the first quarter of 24. Going into the subject of the cost of wheat, the price of wheat, there's no signal, there's no yellow signal, there's no specific worry. We should see the timing of the pass of the cost of this cost through the P&L, and you should see this average price in our inventory converging with the market price in the next quarter. There's no change in marks or importation, mix or importation from other countries, as that we have not been importing from previously. So it's now time for harvest in the southern hemisphere. So these purchases are being made here in Brazil and in Argentina. A new purchase coming from there, for example. Thank you, Gustavo. That's very clear. Next question is from Pedro Fonseca of XP, of XP. Hi, Gustavo, Fabio. Thank you for taking my question. I wanted to go into a little bit the point of the level of services. We've seen evolution, very significant evolution in the free rate, especially in the OTIF. Fabio mentioned that there were several measures that the industry took, but it'd be interesting if you could give us a little more color over the principal drivers of this, and thinking about 24, how much these indicators still have to go, how much room there is for improvement, and a number of what's the potential in volume that the improvement of these service indicators can bring, thinking about 24. And the second point that I wanted to mention to take advantage, since you speaking about Gustavo's question, how is the market responding in the first quarter? These price increases that you mentioned in the question of the ICMS increases in terms of volume and market share, and if in the first quarter, also in the first quarter, if the recovery of inventories, which we saw in the fourth quarter on the part of retailers, how's that going in the first quarter? Thank you. Those would be my two questions. Thank you. Thank you, Pedro. Logistics, for example, it's being done for some time, and we've been talking about this, a consultancy to look at some improvements in that. We see that there's space for improvement in the level of service. Basically, everything begins with this integrated offering of supply and demand, production, costs, and we see that it's the correct product in stock and the adequate mix and the correct DC, and the items of São Paulo as far as it has a demand for this item, even in Rio Grande do Sul. The first big evolution starts with integrated planning of production, distribution, and commercial area. That's the way in which these items have come from the purchasers in a more assertive way, and the stocks that are being distributed. So there's an important change also in the logistics operators who were not delivering at the levels which we thought was correct. We look at that in that sense, and it's still there are two upsides. One is level of service. The preview, as we mentioned in previous calls, the projection is that at the end of this journey, we will be able to bring in one more sale this year, more sales volume this year, between 800 and 1 billion reais over a horizon of 5 years. So that's last year, 3 years as well, last 2 years as well, and the last 3 years as well. So there's two more years to go. Beyond this upside in the majority and the level of service, and consequently giving more availability on the shelf for our consumers of our items, there's also a theme which the company has not pressured. The focus is services levels, and there's also a theme of the optimization of costs, of logistics costs. So that will be for the second level, the second part of this project. First, we're going to improve the services, and then we're going to look at the costs further ahead. It's a little bit what we've done in the area of services. Remembering that all of this comes around because of the qualification of we have Leonardo Prado as the director of logistics, who was in Australia. Recently, we hired the supply chain vice president, who was in Solar, Uch Tabac, who went through Danone and Agil. We have a whole team of planning which came together with these two professionals. So we've seen a relevant restructuring since both in the line of people and processes, and also technology with new systems, routers, routes, routing, and so forth, which is starting to show its effects. But it all begins with people. Looking a little bit, answering your second question, as far as how these new prices have been received, we don't see any pushback. No consumers, neither from consumers, neither from the trade. They've had to this improvement of the ICMS rates. The middle class, depending on the region, on category, but close to 2% as the average pass-through in prices. Nothing so relevant, but the volume is very stable, and we've seen no pushback from the industry, from the stores. So this new price list should go into effect with no problem over the first quarter of 2024. Very good, Gustavo. Thank you very much. This is Fabio. Just to add one thing to Gustavo's information, and the second point about pricing, we have not seen in the market any pressure for the reduction of prices, which is a little bit of what we've seen in the IPCA of biscuits and pastas in January. The share at the beginning of the year, as you mentioned, we've already seen in cookies and crackers that we continue gaining share. As we gain share from the third to fourth quarter, and from the fourth quarter to the beginning of this year, we are continuing to expand our market share position in cookies and crackers. Thank you, Gustavo. The next question comes from Thiago Duarte from BTG Pactual. Hi, good morning, Gustavo, Fabio. Thank you for the opportunity. I wanted to take out of this discussion, which covers a lot of the discussions about a better agenda of services, of good points of service, as Gustavo mentioned, to increase sequentially these prices in the third to fourth quarter. And I use this continuous deflation of costs that we saw during the last year, and so there's space to continue in the measure that as much as you can, if you could open up for us a little bit, understand your expectations in relation to, as we've seen in February, can we imagine with all that's happening that we've seen, that you brought a lot of favorable vectors for the profitability of the company in this call so far. Can we imagine, based on that, with some conviction in sequential improvements in margins in this next first half of 2024, as we saw in 2023? I wanted to see what you could tell us about that. This discussion as far as the continuous search for recovery of market share. If we can hear your opinion on these two items, both on share gains as well as additional margin gains. My second question is about the question of cash flow. Are you well set up in relation to last year with the lower level of leverage, as you mentioned, as you completed in the year? We wanted to hear a little bit more about the question of gross in the end of December. When you imagine to expect the separation of payout, or the question of M&A, any relevant M&As that are on the horizon? We have then in this M&A area that heats up and then it cools off. I wanted to hear how you look at that in that aspect. And finally, just one last follow-up of this discussion of the reintroduction of several brands in the cash and carry area. I wanted to understand if at the end of the day this means an increase in the number of SKUs of the company, a reversion of this tendency that you have announced in the program of adjusting your portfolio in the past, or no, if this is just a one-time, a one-off that we can continue to think about the number of brands and SKUs offered by the company. Those are my three questions. Thank you. Thank you, Thiago. I'm going to start with your last question. We will increase the number of SKUs. These are new brands. And so, as I mentioned, we've done differently from what we did in the past. This introduction of the brands is being done in a different way. A change in packaging and of the weights of these packages, the size of these packages are SKUs with traditional brands. So there is an important change to make the company more competitive in that market. And also, as such, naturally, we have an increase in the number of SKUs. This doesn't mean that the company is not continuing to be concerned with the utilization of SKUs that are adequate for its operation. It's an increase, well thought out, which is being managed closely, remembering that together with the introduction of these exclusive brands, we have the JBP done together, the joint business plan together with the retailers, which as a rule, these will be additional volumes. The addition of these new SKUs cannot steal volume from the current SKUs. There's a whole series of business plan in the point of sale. You have extra points, islands, close to the checkouts, which will help us to leverage additional volumes, which is what happened in the fourth quarter, not in detriment to our margins in general, our image in general. Going back to your first question, what's the perspectives for 2024 as far as the shares and so forth? We see a cost, as you're right, it's cooling off. So we should see an expansion of margins in relation to the previous year, no doubt. We can't say too much about future results, but margin expansion should continue. And what we've been saying here is passing through that moment of the pandemic and after the war and the perfect storm globally, And in a more stable world, all of these actions of improvements and transformation that we've seen in the company will be more clearly visible in the results. That's what we're going to start to see now. And this will bring us to an improvement, a continuous improvement in margins. We're going to leave that 9% in the middle of all that confusion. And we've been delivering at the close of 2024 margins of 3.1%. And our perspective, the company is not going to be happy while we don't deliver a EBITDA margin between 15 and 20%. And we have the perspective in the short term to normalize what was the average of MGS, which is an EBITDA margin of approximately 16%. This is our direction going forward. All of this together, with gains in market share, with consciousness of a structured way, with coherently, and doing it in a way that we will not lose profitability. This is the principal concept. Going to the back to the area of cash, the two levers to talk about this capital structure is the payout. We've been working hard on that theme, on that subject since 2019. You remember that our payout was 40% of distributable. It went to about to 60, and we added a distribution, fixed distribution over the quarters. Last year, in 2023, we increased from 60 to 80% the payout, and from 0.5 to 0.6 cents per share in these quarters. So we did an extraordinary distribution of 300 million reais. We're accompanying this very closely. We can't talk about the future, but it's clearly the company has evolved in that sense. On the M&A question, we talked in the past that we would start the year to do our homework and scale up our new companies, organize the structures, the operating structures, as Fabio mentioned. We look at these two factories of Latinex and Jasmine, even the physical space, we returned a structure that was rented by Latinex. And so now just one nota fiscal, there's no more nota fiscals going back and forth. So we rationalized a great deal that operation. So in the correct route, to scale up these routes, which we see as a huge potential with much higher margins than MGS. So the homework, as we mentioned in 2023, it has been taken care of. It's not done because there's lots to do still. We spoke a little bit about that. But in that sense, yes, it's done. If it comes back to us in a way that is as the MGS way, without going crazy, which has been the story of our acquisition since 2003, a step-by-step approach, things that make sense and that have price multiples acceptable for our market. This is our way of doing things. When I say a total connection with our business plan, eventually we see which will be concentrated in the regions in which we have the intention of moving forward. We're talking about the South region, in the core business of the company, especially for the next few years. It's not the moment for new acquisitions, and the international market at this moment is not something that we've looked at frequently. The focus is on regional expansion and the improvement of the mix. In the regional expansion, we see an M&A in that direction, which accelerates the expansion in these regions. As commented, MDS will be a strong candidate to participate on these opportunities. So we're interested in continuing in growth, inorganically and organically. We have a team which is the Malna Masa project, the Let's Go project, to accelerate this process, organic process, but we're totally attentive to the possibilities that may appear for inorganic growth as well. So this would be very, very important for us, having this cash on hand for any eventual steps that might come along. This idea of heating up and slowing down, if we depended only on MGS, it would be really hot. But we have to be careful and agree that we have to agree with the Russians. That it's not always, it's not everything I want to buy or acquire is for sale, etc., or vice versa. So we have to be patient, keep our feet on the ground, look at the possibilities without going overboard, without pressure, which is what we've always done in our 70-year. No craziness in that sense. Okay. Very good answers. Thank you, Gustavo. Thank you, Thiago. The next question comes from Lucas Ferreira from JP Morgan. Hi, I hope you can hear me. I have a few follow-up questions, two in reality. First, about volumes and prices in this question of revenue. I remember that you mentioned that part of your strategy would be to lengthen your terms for your clients during this quarter. And what's your perspective that we can have for the beginning of the year? Can you still use this tool of giving longer terms to people to be able to expand your volume, especially in the cash and carry? About this service units, you mentioned in your last investor day that it was a very important item on the table. So something like a month of additional revenue, but the volume in recent years, last 2 years, and the improvement in the OTIF, we don't see this volume. Is it being captured? We can see that going forward with better volumes and better areas in the service, or is this through mix, as you mentioned, where we see maybe it's not the whole volume, but the better volume because of pricing and so forth? How do you translate that into better revenue? A part of our clients for this revenue, and this concession comes into a larger context in the JPB model, which is well known in the market, and we've seen this during 2023, that had its kickoff in an event that was done on the PRK, using the PRK brand, which we called with some of our clients. And I think you even participated, if I'm not mistaken, the sell side analyst participated in this model, which happened in Sao Paulo, in a space which was totally covered with the Piraquê brand. So at this moment, when we concede additional terms to some of our clients, having as a counterpoint the increase in volume that they purchase, was something that was very well thought out and within an equation to generate value. At the same time, we use a little bit of our working capital. We also had a counterpoint in the area of volume and the increase of gross margins. If this concession will be permanent or not, or if it will happen again, depends greatly on each one of these negotiations and how we're going to revisit as our clients do. If this happens again, what I can tell you is that we're going to seek a counterpart in the volume and in the increase of margins. We see what happened in the fourth quarter, and it worked. We conceded a additional period of 15 days to some clients. The total MDS, there was an expansion of terms of average term for 5 days, but we had a counterpart in the increase in volume and increased margins. So discussed case by case going forward in the environment of the JBP, the Joint Business Plan. The level of the service levels, as Gustavo mentioned in an earlier question, there is some upside. When we begin this journey, the expectation that we had was we'd have an additional month of revenue. And I would say that we're halfway there, perhaps a little more than halfway there. But there are still improvements in the indicators and case ratings and the OTIF to be captured in the next 2 years. So yes, there's definitely upside in relation to the level of services. When we increase service levels, we don't leave any money on the table because we're able to attend our clients in the portfolio which they requested, in the quantities ordered, and in the periods that were agreed to. Thank you, Fabio. The next question comes from Laura Hirata from Santander. Good morning, people. Thank you for taking my question. I wanted to talk about 2 points. The first is in relation to organic growth. If you have some extra capacity, and if you have space to perhaps to do this in hand, new lines and new items, how are you thinking about this in relation to follow-up or perhaps some specific product? And also, I wanted to look at the question of the cash and carry with this strategy that you've shown of entry-level brands. How has been this both in relation to volume as well as the space on the shelf? For me, that's it. Hi, Laura. This is Fabio speaking. Thank you for your question. Internally, we really like to talk about unused capacity. We call it reserve capacity, something that we have for space that we have for the company to grow. And today we have about 40% of reserve capacity, looking at all of the different categories of MGs, from wheat flour and cookies and pastas and margarines and oils. So we really don't have to add any capex to follow its strategic plan, at least over the next 4 to 5 years, which involves the recovery of our market share, the growth in volume, and the widening of margins, and the increase in the returns as well. So we have a good reserve to recover share in the Northeast region, and the recovery of share in the Northeast, it works together with the reintroduction of these exclusive brands in the cash and carry channel. There are 4 brands: Pelagio, Prediletto, Estrella, and Pilar. Obviously, they have potential for these brands outside of the Northeast, but however, the initial focus in the Northeast region, the growth of an expansion of market share in the third quarter to the fourth quarter, already evidences that this is the way we've chosen. This route we've chosen has given good results. As we saw in the fourth quarter, there was a question of volume, the widening of market share, the increase in gross margins. So there's lots of value to be captured going forward based on the dilution of our fixed costs, a more relevant dilution of our fixed cost. So I think even Thiago said if there's any upside in the short term due to the fall off in commodities prices, as Gustavo said, yes, there is upside, but there's also some upside in gross margin by a better dilution of our fixed costs. And the use of our reserve capacity is not exclusive for these brands that are low price and low cost. There's a lot of potential to be captured with the growth, accelerated growth of items of higher value added, such as cookies, wafers, and we have the opportunity for a relevant expansion in market share. And the Piraquê brand, which is one of the brands which has shown accelerated growth in the total of the MGS brands, both in the regions that are the more traditional of such as Rio de Janeiro, which are regional areas for Piraqué, and São Paulo, which is important for the growth of that brand, but also in the north and northeast. Prior to the acquisition, Piraqué practically didn't exist in those regions, and today already has almost 200 million in revenue from the Piraqué brand in the north and northeast. So your question makes all the sense in the world. It's something that's priority for M. Dias to use better our capacity, both in the recovery of market share in the lower value-added areas, as well as in the expansion of revenue and volume in the items of higher value added. One does not compete with the other. Today we're working in these two opportunities, in both of these opportunities. Okay, thank you. That's very clear. If I can make a short follow-up as far as the cash and carry, to understand better, how would you be able to, with these exclusive brands, how has this affected your relationship, especially quantitatively as well as shelf space, bargaining power with these stores and so forth? This is something very positive. It's something important to remember that M. Dias, we mentioned that MD is for everyone. We have a group of brands which permits the company to play in all of the price levels in the market. Both a brand like Estrella and Pilar, which operates in a lower price level, as well as Vitarella in the medium price range, and Piraqué in the higher price range. So when I deliver a complete portfolio to the client, but in this case for the cash and carry client, this tends to be favorable from the standpoint of growth and from the standpoint of negotiation with that type of client. So we've seen this positively, the introduction of these brands in this channel. Of course, as Gustavo mentioned previously, there is a learning curve in a way that we have to guarantee that these are products, low price and low cost items with the current value proposition being delivered. Very good, thank you. Thank you, Laura. The session of questions and answers is now closed. We'd like to pass the word to Gustavo to make his final considerations. I want to thank you all for your participation in our call. Fabio, Guilherme, everybody. We know that as we go in this direction of profitability, growing market share with intelligence, expanding margins, focused on processes and execution, looking at the growth of our portfolio and a number of SKUs, revising RPM and the commercial strategy, using our factory setup and an increase of our level of services, a series of levers that have already been identified and which are being worked on by our transformation team every single day. So we're very, very hopeful about 2024 and in continuing on this trajectory, which has been successful so far. So we can thank you all, and we're at your service to attend any of your needs and whatever you need from us. If you need to go into any further details, please feel free to contact us. Thank you very much. The video conference for M. Dias Branco is now closed. We thank you for all of your participation. Have a good day.